Hi everyone, my name is Ibreez.
And I'm Ibrahim.
And we both work as doctors in the NHS in the United Kingdom.
And today in this video, we're going to talk about how you can buy a house in the UK.
So we're both on Tier 2 visas because we are international medical graduates, which means we needed a visa to come and work in the United Kingdom. A lot of times you'll find that people will tell you that if you're on any sort of visa or if you don't have indefinite leave to remain or ILR status or British citizenship, it's pretty much impossible to buy a house with a good rate.
That's not true.
And we say this because that's what we did. We went ahead and we bought a house after 1 year being in the UK. And this video is really going to be about us talking our experience through to you all so you can understand how you can go about doing it. So the first and foremost, the most important thing I think personally when you want to think about buying a house is where you're going to buy this house.
Exactly. Location plays a big role in choosing to buy a property because as doctors, even as trainees, there is a chance that you will be moving around in different places in the UK, and actually committing to buy a property when you're moving around may not be the first thing that comes into your mind. So depending upon what your position is in your life, like, if you have joined a GP training or if you have joined some sort of training and you like the area and you want to make your career in this area, and I think that's where you have to think about buying a property there. But if you're not sure that I'll be moving into a training from one place to another during my entire training and I'm not sure where I'm going to join and everything, then probably you're not in the right time or place to buy a property. So first and foremost, thinking about whether this place is the place you will be staying for a long term, and then deciding to buy a car. So after location comes about cost.
So when you think about how much money you're willing to put forth, so like we said before, we did it after 1 year, we put the money down. And you might be like, well, wait a second, where did you get all that money from? And it's really not that big a deal because I think a lot of times we don't understand what we're getting into. So there are a lot of schemes or tariffs that the United Kingdom has if you're a first-time buyer, where you only need to put down a certain percentage down as a deposit. That doesn't necessarily mean you have to put down a huge lump sum of money to offset the amount that you'll be paying off your mortgage for the next couple of years. If you are interested in looking into Help to Buy, we put it in the description box below so you can have more information about how the Help to Buy process works. There are some pros and cons to Help to Buy, so make sure you read everything thoroughly before you go ahead and decide that that's what you want to do. Please also make sure that there are a lot of restrictions about if you are eligible to Help to Buy, so also make sure of all those things before you decide that it's the right thing for you. So while we didn't use Help to Buy, not that we weren't qualified or we weren't eligible for it, it's just that some of the restrictions that it had on it were not things that we wanted to deal with. We still were within 1 year able to put enough money down to put down a sizable deposit to ensure that we had a good mortgage rate. So if you're wondering how that was possible, if you check out our video on about a doctor's pay in the UK and the description box below, we've linked an article about how you can budget well. It really does come all down to that. I know it may be really easy for us to say because we're both working individuals, we don't have any kids, and when you're under 30, you really have a lot of leeway to do what you want to do and save money the way you want to save money. But at the end of the day, that doesn't necessarily mean if you don't meet the same criteria that we meet that you aren't able to do so. It's just about setting that goal.
And it's all about budgeting. And actually, budgeting has to have a goal. Like, you have to know what amount you want to save in 1 year time, what amount you want to save in 2 year time, and actually putting it away every month and making sure that it's actually growing and you're reaching to your goal. So there is another thing, which is mortgage agreement, which I did not know a lot about before actually making this buying our house. So basically, you'd find different terms that you'll have to learn new, loan to value, and obviously deposit and all the other stuff, which we have extensively discussed in one of our articles, which is called A Step-by-Step Guide to Buy a House in the UK for International Graduates. The link is in the description. Please go through that. We'll obviously touch some points in our video today, but if you want to know in depth, please go through the article.
Essentially, what you really do need to know, obviously, is the more that you put down a deposit, the less that you'd have to pay off in the next coming years. And of course, the more years you put on the mortgage, for instance, if you say that you'll pay off the house in 20 years to 30 years, the more potential interest you'd be looking to incur, which would basically, in the lump sum of it, increase the amount of money that you would be putting down for your house in total. So if we were to just think about it in another sense, if your house costs you £100,000, let's say, and you put down 10%, so 10% of that 100,000 has already been paid for.
That means 10,000.
Essentially, it's £10,000 you've already paid for out of that 100,000. All right. So now you sit down and you speak to a bunch of mortgage brokers and you explain to them, look, I want this type of a house to be paid off in 10 years time, let's say. All right. And they're willing to offer you different types of mortgages. They may be fixed rate, they may be variable rate mortgages. Personally, I'm a big fan of a fixed rate mortgage. What that means is the rate that they're telling you that you're going to have to pay back the house at is the rate it will be for whatever duration of time that you have agreed to. So if they tell you that your rate will be 2%, that means 2% interest on whatever is remaining has to be paid off.
So if you paid off 10,000 from a 100,000 house, you're actually borrowing 90,000 pounds. So the 2% would be that on that 90,000 pounds, if it's 2% for a fixed amount of time. So this interest rate is variable in terms of how long the mortgage is and how the terms of the rate. Like, if they give you a 10-year fixed rate mortgage, whatever happens, the rate will not change and you have to pay it back within 10 years. And yes, you can pay it back early if you want to, and there are other terms of mortgage and everything in that. So basically, if you don't understand the whole calculations behind the mortgage thing, there are people who are called mortgage brokers.
Yes.
So you can basically hire them without any cost, because they will actually get paid from the mortgage company that they will lend you the money, so you don't have to pay them anything. Or sometimes if you're buying from a new build, or if you're buying from someone, they probably can have some mortgage brokers who can help you get a good deal of mortgage from different companies. But I would suggest personally, you also look at the comparison websites, to understand whether there are different mortgages available and how the interest rate and how the packages and everything is, and go to the mortgage broker and say, like, I found this, can you contact them, or can you apply for that as well? So remember, the steps are first finding the suitable mortgage that you want to take, and then after finding it, applying for the mortgage, make an application. Then they will go through some sort of credit check for yourself, like whether you have like a good job, whether all the things that related, whether you have any other debts, whether you have any other mortgage, whether you have phone contract, and all the stuff will be looked into, and they will determine whether you are a good person to lend this huge sum of money or not. So after you make the application, the mortgage company will reply back, yes, we can offer you a mortgage, if they say yes. So when they say we can offer you a mortgage, then you sign the document. They basically transfer the whole amount of money to the person that you are buying the house from, whether it's a construction company or a person or whatever, and then you basically own the house, and the money that you now owe to the mortgage company, you gradually in a monthly manner you pay them off. So basically it's like paying rent, but it's just
you're paying the rent so that you can own it rather than somebody else
Exactly.
being able to own it. If you're still really, really confused about the whole mortgage process or how you will go about finding something, if you're a BMA member, and we do suggest you be a BMA member for this, if you check in the description box below, we've given a link so that you can join the British Medical Association. Not only are they there for checking your rota and stuff like that, but they will help you with this as well. They have a free service that they can have some financial advisors talk to you and help you figure out what kind of mortgage you really need. The really good thing, because we did talk to some of them before we settled on a mortgage ourselves, is they're able to make the mortgage, the lenders understand basically how our jobs work and how our visa works. Because sometimes what can happen, especially if you're in a trust grade job or if you're in a job that's only for 1 or 2 year visa, they'll think you're only going to be in this country for 1 or 2 years.
Yeah.
And if you're looking for a mortgage that's really long, they're just going to be like, well, what are you doing for the rest of those years? Are you going to pay off this mortgage or not? You're not going to look like you're a really reliable individual. But these guys know how to talk to them because obviously they've done this a lot of times for other people. And it's already a part of the fee that you're paying to the BMA. So if it's there, why not use it? So if we continue with the discussion regarding the £100,000 house that you were looking to buy, and you've put down 10% of that mortgage, and now you're wondering, well, if I put it over 10 years, will I be able to pay that amount of money every month? And that's a really good question. You don't want it to be that, yes, you're paying off the house and it's going to be yours, but if you can't put the money together every month, it's no good.
Or if it's like way too much than what you're actually earning, then basically you'll be living
Paycheck to paycheck.
So that shouldn't happen. Even after paying the mortgage, you should have some in your salary to save. So
Yes.
that's a determining factor as well.
So know what would go into utility costs, what would go into council tax. Will you have to take any sort of transport? Do you have any other costs that you are also paying off? For instance, if you have any children, do they have any recurring costs? If you have a car, if you have any other kind of things that you are renting or you don't own or that you're paying off of. Sometimes what can happen is too that there's an overlap period between when you're renting a property before you move into your mortgage property. So do you have to pay off anything in that rent? Try and keep a good lump sum of money to the side that can help you pay off the amount of money that you're looking to pay off in the next couple of months, so that you reach some sort of a balance in between. You should never be in a situation where you think, I don't have enough money to pay my mortgage. It doesn't look very good, and it's not really a good idea to remortgage so early. So if you think that if you take a 10-year mortgage, you'll be paying too much money per month, then think about getting a 15-year or a longer mortgage. I know a lot of us are a little scared about doing that because we think about, oh, then we have to pay more interest over more time. But really, you have to think about right then and there, is it something that you can do? If you feel somewhere down the line that you can then pay more money off per month, you can always remortgage. Or as Ibrahim had mentioned before, there are options to overpay.
Yeah. And also, I think as a very, very general rule of thumb, the more years you add to your mortgage, the less amount of monthly payment it would be generally. But if you think in the long, greater scheme of the plan, if you add more years, basically you'd be paying more money in interest. So if you have 10-year mortgage, probably the interest would be considerably less than a 30-year mortgage. But in a 30-year mortgage, every month you'll be paying less. So it looks less every month, but when you multiply by 30, it is much, much larger than a 10-year mortgage looks like. So understanding that balance, looking at your paycheck, how much comfortable I am if the monthly payment is say £700 or £800. So if the monthly payment is £700, then with this interest rate, how long would be the mortgage time? So understanding and calculating all of those. If you have any question, ask them first. Don't just accept, because if you say, no, I don't understand this, can you please explain it to me? They're bound to explain it to you. Don't just, they sell you one thing and you just, without even knowing or understanding, you just accept it and later on understand, oh my God, what mistake I've made. That's a bad thing. And we did not know all this, terms and nook and crannies. But what we did is, I'm not understanding how it's happening. Can you make me understand what's loan to value is? What's this 5%? What's this 95%? And they were really calm. And all these were conversation in emails, and it took months and months for this to make 100% clear. And then we said yes, and we made the transaction. So, like in your clinical work, if you're confused, ask question. This is a very big commitment in your life as well. If you're confused, do ask questions.
Definitely. So, of course, you know that it's a bank that's going to be lending you this money for your mortgage. And you might be wondering what they're going to be looking for in order to say, yes, this is a person that I want to give money to. Like Ibrahim mentioned before, you have to have a really good credit score. Now, when I say a really good, it doesn't necessarily have to be perfect, but it shouldn't be poor or non-existent. A lot of us, when we're really new to the United Kingdom, we don't have a credit score, so that can't really play in our favor when we try and take things out on a loan or rent things. So we have talked about, and we've linked this also in the description box below, how you can get a really good credit score. But it's something from day one that's really important that you do, because as you build your credit score throughout your career in the United Kingdom, you can start getting things at an easier or better rate because you are seen as a reliable individual who, if money is given to you, will pay back on time. Another thing you need to have is at least a 3 months bank statement. It's a good way to show that you are regularly getting money in, and you're also showing how responsible you are with that money once it comes in. And of course, if you have a P60 form or a P60 statement form already from a previous job, please also submit that. You will need to also explain when you are, asking for a mortgage, what other forms of, money goes out of your house. For instance, if you have any dependents back home that you're paying for anything, if you have a car payment that you have to pay for, any sort of insurance or anything else that you have that money is going through regularly, they want to know your utilities, your bills, for internet, for, a phone contract, all of that, because they also have to do the math that, all right, if this person is spending $1,500 every month already on other things, and they want to pay $1,500 every month on a mortgage, and they only make $3,000 a month.
I mean, yeah,
Are
it
they a
adds
good
up to
person?
3,000 exactly.
Are they a good person to loan to? Is there a chance that there may be a month where they can't pay the loan back to us? So keep all of those things in mind and do your own calculations when you think about putting down a mortgage money. So you don't have to have some sort of palatial mansion with like 16 rolling acres on a beach cliff. I mean, you can if you want to, but if you want to be a little bit more reasonable about it, if it is an apartment or if it is a condominium or if it is a small place, initially think about what you need. If you have a large family, if you need a backyard, those are going to be things that you have to remember. You also want to make sure it's not too far from where you're working. You want to make sure it's near anything else that you would need on the day-to-day, for instance, convenience stores, supermarkets, if you have kids, for daycare centers or for schools, or for just your day-to-day stuff. You don't want to be too far away from the city life if that's something that you're into, or maybe you don't want to be too close to the country if you don't like being close to the country. So all of that stuff is really very important. And of course, the neighborhood. Try as much as possible to see the property beforehand. Get a feel of the neighborhood during the daytime, during the evening, during night. Get a look around of the neighborhood, see who else is staying there, what kind of properties they have. If that properties are older properties that you're looking at, see what kind of issues those properties may have had over the years, and if there are things that you would feel comfortable, because every house once it gets older is going to have a problem, but are those things that you feel that you would need to keep up with, or would you want to look into buying a new place, and would it have the things that you would want in a new house? So all of those things are really important, because without that you wouldn't necessarily be happy with the house that you have. I mean, you're putting down a huge chunk of money, and if you're not happy, don't put any money down for a deposit. Don't think, well, I've taken this realtor to see 37 places and now they're gonna be mad at me if I don't pick a house. No, That's their job. Okay, obviously don't be ridiculous about it and keep just pulling it out for years and years and not actually pick a place. But if you know what you're looking for, go after it. If you have a plan in mind, tell them this is the kind of house that I'm looking for. I'm looking for a 1-bedroom, 2-bathroom kind of apartment that has a small yard. And they'll try and find it for you. They'll be as helpful as possible because that's what they're there for. And you shouldn't settle for something that you're not happy with.
So as I said earlier, paying off the mortgage kind of feels like paying off the rent every month. But obviously, the mortgage may may seem to you that you're paying a lot of money compared to how you pay as a rent. But as I said initially when we started the video, it's basically where you stand would make more sense whether renting is more fiscally responsible or mortgaging. Because if you are looking to stay in a place like say 3 years, 4 years or 5 years down the line, don't you think mortgaging would be a better idea? Because if you rent continuously a place for 5 years, you're basically paying off someone else's mortgage. So make sure that you understand your position in the UK. If you're renting in some place like continuously 1, 2, 3 years, I think it would make more sense to basically to pay towards owning a house and paying off mortgage than to rent. But if you're like, no, after this 1 year I have to move to another place anyway because I have to move for work, then probably renting makes more sense. And whenever you feel settled in one place in the UK, only then probably buying a house and mortgaging makes more sense. There is a rent versus mortgage calculator which is linked in the article that is linked below in the description. Do check it out. Then you can actually understand whether it's more possible for you to rent or to buy a house.
So now, of course, you must be wondering, well, how do I find out where I can buy a house? So there are like a ton of websites. Stuff like Zoopla or Rightmove can help you figure it out. But if you still don't want to look on the internet and you really want to get a feel of the properties yourself, if you look in your different neighborhoods, you'll find a lot of realtors will be there. You can go to their offices and talk to them and explain, like we said before, the type of property that you're looking for and what you want from them. And of course, if you just walk around different neighborhoods, you can see what's on sale and you can just see what the number is or whoever the agency is that's selling the property and contact them and ask them if they have any other similar properties. So for us, what we ended up doing, like I said before, once we first already came to the United Kingdom, we had it in our mind that once we got into training, if it was somewhere that we were happy with and if it was someplace that we wouldn't be moving around in too much, we would go ahead and buy a house there. So in our first year, we saved up money with that goal in mind, that we wanted to put down a really good sum for our deposit on the house. And as we both got into internal medicine training, we knew that it was a good thing in the sense that the place that we got into, first, it was a place that we wanted to be. Secondly, we didn't have to move for our 3 years of training. So sometimes in training, you might have to move after 1 year to a different hospital. It wouldn't necessarily be very far away, but it obviously would be a different hospital. So even if that's your situation, if you're moving, every year, from a different hospital or back and forth between hospitals after a couple of years, try and find a place that's maybe in the middle. It doesn't necessarily have to be next to the hospital, but it should be in a good area that you're happy to live in. And of course, that's not too far from where you work. Obviously, it would be perfect if you could always live right next door to the place that you work, but of course, that's not always something that can happen, especially if you have a lot of other considerations. So after we did that, when we knew where we were going to, we wanted to think about, should we buy a new house or should we buy an older house? So because this is our first house, we wanted to buy a new house because we knew an older house would come with a lot of responsibilities and a lot of added cost. And we wanted that to be something later on for like a forever home. But for right now, something new would be something that would make sense for us, especially because there were a lot of new properties coming up near, the place that we work. And because there were properties that we thought first that we could pay off every month without having to think too much about how much money we were spending, that were really nice and kind of quirky, eco-friendly type things, which is something that we wanted. They had a backyard. You would be very surprised how many places don't actually have a lawn, a good backyard in the United Kingdom. Not always, but within maybe our ranges that we were looking at. And of course, they had kind of a neighborhood feel that we liked, and it was near to everything else. It was near to a lot of convenience stores and near to the city as well.
And also, I think there is a subtle thought that you have to give. What will be the resale value of the house? Mm-hmm. Because not always the first property that you will buy will be your forever property. I mean, that's true for anything and everything that you spend money on. So as cars, houses, this have a potential to sell it again. So whether in the area that you're buying a house, whether the resale value would be appropriate, you can give it a thought. You can actually think about what would be the establishment next to the houses, and you can even talk to the person who you're buying from, and all the information actually is there available on the websites, when this property was last sold and how much was the selling money. So if you think that in the market this house actually is in the increasing side, so if you buy it now, probably in the future it will also increase. So follow the trend of property prices and see whether your house will have a good resale value. That also adds to the the planning of buying a house.
Don't feel pressured to buy whatever house that you're looking at. So with us, because I think they thought when we were looking around at the houses, oh, these kids are real young, maybe their parents are buying the house for them, let's just try and sell them things that they don't necessarily need. Yeah, no. So we realized that initially that they thought that that's what we were out to do, and we made it very clear that we are spending our own money and we knew exactly how we wanted it to be spent. So it's very important. I'm not saying necessarily that people will swindle you, but it's like with any business. If they think that they can make an extra buck, they will try and make it. So be very clear about what you want and what you don't want. And like Ibrahim said, ask a ton of questions. I don't even know how many emails we must have sent back and forth, making very clear and very certain of what we wanted. So because we got to, we picked a new house, we got to choose things in the house, like, the type of flooring we wanted, the type of, countertops, tables, whatever kind of stuff that we wanted put in the house. So all of that we chose meticulously, knowing exactly what we wanted. And if there was something wrong in the way they put it in, or maybe they accidentally put in something wrong, we told them straight up that, look, this isn't right. This isn't the way it should have been. This is actually how it should be. And I know sometimes we aren't the type of people who want to be very confrontational, especially as being international medical graduates, and we're on visas. We're not sure how people will take it. But you have to remember, at the end of the day, it's your money that you're putting into it. So if you're not happy with how it's being spent,
you have every right to contest and say it otherwise.
That I didn't agree to this.
Exactly.
And another thing you have to remember, if it's old property or new property, there is this concept of something they call snagging, which essentially means you will go through the property and see if there are things that they need to fix before they hand over the keys to you. So you can do this by yourself if you're really good at picking out things and knowing what shouldn't be there, or you can hire someone as a professional to do it. If it's a new house, the new house will do it on their side as a courtesy to you, but you will be there to find things and pick out. Again, this is a time where you should, by all means, pick out and show and ask about everything, even if it's something that isn't something that they would need to fix, but you asked. So if there was something that could be done for it, they'll go ahead and do it, and it's their obligation to fix those things before they hand over the property to you.
And if you're buying an old house, 100% make sure that you do a snagging by a professional snagger, because it's impossible for, I would say, as a doctor, to actually know what things are right or wrong. Because so many things can be polished and look new, but probably this will not last long, or this is not good material, or this is not right. And a professional snagger will identify that and tell the seller that you have to change this before my whatever person can move in. So you have to pay for the professional snagger, but it's worth
It's
it.
totally worth it.
Because if you have to change those things later on, it probably will cost you much more than a snagger. But if actually they're covering for the first few days or probably first few years some insurance left, then probably you can get it done via the insurance and save you all the trouble of spending all this money and arranging all the things that you have to arrange.
So hopefully we gave you guys a quick idea of how you could go about buying a house in the United Kingdom on a visa. Don't think that a visa can put you off from buying the house at all. We did it, so can you. It's totally possible. Just set your goal, and with that goal in mind, go forward.
Thank you all for watching this video. If you have any questions related to buying a house while you're in the UK, please ask in the comments below, and do read through the articles and the links that we have provided in the description box. I think whatever we could provide in this video will expand more if you read the articles that we have provided. Continue to watch our video and support us. Please like and subscribe this video and subscribe to our YouTube channel. Like us on Facebook and follow us on Instagram. Thank you for watching it again.
Bye.